Hello, sitting here with Chris LoPilato, who is the CEO of National Financial Credit Group. They're a nationwide company. The office here has been here since about 2010. Chris has been helping people fix their credit and address credit issues since about 2004. He's extremely knowledgeable, and I think that he's going to bring a lot of great information to our fellow buyers here as they set out on the Um, mortgage journey, house buying journey, whatever we're calling it at this point. So, Chris, thanks so much for jumping on the Zoom with us here.
I appreciate you inviting me.
Yeah, absolutely. So, Chris, if we can sort of pinpoint a handful of things, let's call it three things that a potential homeowner or a home buyer has to look at to prepare their credit for that mortgage application. Let's say they're, a year or 6 months out or so. If there was a couple of major things for them to hit, um, what are they?
Yeah, I think the first thing would be to be able to pull your credit. Identify exactly what your credit looks like. Take a look and see everything is exactly the way you expect it. And hopefully there are not any surprises. Very often we hear a lot that someone will say, oh, okay, my credit's great. We'll pull credit, and then all of a sudden they identify there might be something there that was not supposed to be there, and it is. Or it could be an error. Errors happen all the time on individuals' credit. So before applying for a credit or a mortgage, you want to be able to end up making sure that that your credit is in good standing. And what does that make? It makes it for a lot easier transition also when you end up meeting with your mortgage broker. You'll know exactly what it is, and having that knowledge in advance is power, in my opinion.
Okay. What's the but is there sort of there's the the general wisdom is that a credit pull will sort of impact your credit. Can you clarify that?
Yeah, so you're right. Most often, if you're pulling a hard pull, you're applying for anything such as a mortgage, a credit card, a car, any type of bank loan of any kind, and requested monies. That is considered a hard pull, and that will negatively impact you with an inquiry. However, there's also what's called a soft pull, which I also educate individuals to say is a self pull. Consider it as remembering it as a self pull. If you're pulling it yourself, at that point, you are not being impacted negatively at all. There are many options out there to be able to end up pulling soft pulls. Some of them are free. Some of them, you'll have to pay for. And there's a couple of resources that I like to be able to offer for individuals, because you want to make sure that whatever resource that you use, it's going to be a really worthy and good resource to use to be able to identify what's on your credit and check. In fact, to be honest, we always recommend all of our clients to make sure their credit is in good standing and checking their credit at least twice a year, at minimum, if not more often.
Okay. And when they're looking at it, what's that target score? Like what's a good score, for people who don't really have an idea?
What we strive for all of our clients is at 720 and above. That's
Okay.
our goal. 720 is a really good score to be able to qualify for a variety of different things that you'd want and get approved for. There are some mortgages for companies and banks rather that want to be able to end up having a 740 on some of the jumbos, but on average, I would say about 720 and above is really great.
Okay.
When it's less than that, you may not qualify for all the products and loan types that might be offered to you. You might have a lesser selection and perhaps even in some cases more money down, depending on what you're doing and what you're going for based on it. But going back to the credit options, there is a difference between Vantage score and FICO score, and then difference between getting a good resource and not so good. So the household name that most people will end up looking at and identifying with is Credit Karma. Credit Karma is one that people know nationwide, and it's a good source. But the problem is the Credit Karma does not report all 3 credit bureaus. And it is a Vantage scoring model. Fannie Mae and Freddie Mac exclusively use only my FICO. And so you want to be able to end up looking at a FICO if you are going to a mortgage. I do recommend that to know, a really good estimate of what your credit score is. My FICO is a little expensive. On average, is roughly about $40 for a pull. $39.95, I believe, is what they charge to pull your credit. Of course, you can cancel anytime afterwards to be able to end up having it, but it's $40 for that subscription. For a Vantage score, a really great option that I like even more than Credit Karma is Privacy Guard. Privacy Guard is a great resource. They're always running a promotion as well. For the cost of $1 for a 14-day trial period, you can pull a Privacy Guard.
Okay.
Great option.
So was it My FICO, MYFICO?
Yes.
Okay.
My FICO will provide you your FICO score.
Right.
And the FICO score is exactly what Fannie Mae and Freddie Mac and your mortgage broker and most banks will use to identify and approve you for your mortgage.
Great. In terms of positioning, let's say, you have that score and it's not what you want it to be, to sort of start working at it. Let's say someone has some leftover money. If you're looking at your household budget, what's the best way to allocate those resources?
Yeah, so absolutely identifying what your discretionary income, doing a financial intake in yourself to be able to identify what you can afford, what you can't afford, that kind of thing. Also using that discretionary income to identify, the what ifs with your house as well in that purchase mindset. But talking about your bills only and making sure if there's any credit card debt, making certain of that FICO scores at the highest possible level. You pay off the lowest sum that you have first, and then go to the highest sum. That's the best strategy that we end up using and implementing with our clients.
Okay.
And making sure that you can try to maintain as high as you can. Rule of thumb is if you have anything over 30% as a carrying balance on your credit report with any one credit card, you're going to be negatively impacted on your score. It's getting closer and closer to utilization. It used to be 50%. Now it's down to 30%. There are some scoring models that will start negatively impacting you anything above 5%. So I would probably say the average is 30% as a rule of thumb, is using that, identifying, and what you do is 30% of your total limit, and you don't want to carry anything more than that.
Is there a danger in having too little credit? Like, is there a danger in having really sort of none?
Yeah, there is. If you have 0 credit whatsoever, you're going to have a difficult time in getting approved for a loan. Versus having, well, let me rephrase that, Mike. So having a credit history and having at least 3 credit trade lines that are on your credit report, allowing you to have a healthy credit score. And you want to be able to make sure that you have a balance between revolving debt and installment debt. The differences between installment loan is car loan, a mortgage, that if you have a loan with a fixed amount and a fixed number of payments, that is considered an installment loan. A credit card is not. That's going to be more of a variable. Therefore, it's going to fluctuate up and down. And those are good to have as well. But you want to have a healthy balance between installment loans and also a revolving credit line as well, allowing you to be able to have that. So that's important to be able to have that balance. But again, going back to where allowing you to maximize your credit score is not to exceed 30% of your limit on a carrying balance. However, circling back, because this is a myth, people think that they have to carry a balance to maintain a good credit score, and that is a complete myth. You could have 0 balance on all your credit cards, not have any carrying balances whatsoever, and you'll still have a healthy credit score. What it depends on is your payment history, how long have you had it open, you're showing responsibility, that you are able to end up charging something and paying it off, and you have in the past. in order to maintain that relationship with your bank, you want to use that credit card, at least once every 6 months at minimum to be able to end up having. But as a rule of thumb, you want to be able to, try to have it to zero if you can, but if you can't, no more than 30% of account balance when you are applying for a mortgage. If
Great.
you're looking to apply for the mortgage and keep your scores at the healthiest and highest level that it can be, you want to do some mortgage prep in advance. Part of that mortgage prep, pulling your credit report, identifying if there are any blemishes, no surprises. And then, of course, with the common question that we're asked, by the way, is, well, I don't have any blemishes. I don't have any late payments of any kind. I don't have any derogatories, not a negative item on there, but my credit scores are not healthy. Again, you got to go circle back and say, okay, what debt am I carrying? Am I carrying debt, and how much debt am I carrying, and making sure that it's not exceeding over 30% of your limit. You don't want to reach utilization.
I got you. All right, perfect. So just to wind down, the next steps. Someone watches this video, they like it. Talk about the next thing that they should do, and then tell us that if they find an issue, how they contact you and your company.
Yep. So hopefully they love this video, and hopefully this video was helpful. And hopefully they're able to end up identifying what their credit scores are, making sure that they have, a mortgage broker before they obviously know that and have that knowledge in advance. But if they do have any blemishes or any issues or any problems whatsoever on their credit, please give us a call. We're at our website is www.nationalfcg, that's F like Frank, C like Charlie, G like George.com. We're located here in Braintree, Mass. Our phone number is 617-300-0371. We're not only local here, obviously we're local to Massachusetts, but we can work nationwide, wherever they are.
Awesome. Chris LoPilato from National Financial Credit Group. Those websites are myfico.com. Privacy Guard is another company, and then your company, your website is nationalfgc.com.
FCG.
Nationalfcg.com. Sorry about that. All right. So hopefully we got something out of it. And again, from a financial perspective, definitely take this stuff, to heart. Chris definitely knows what he's doing. And if you have any other issues or legal questions or anything like that about buying a home, or you're just starting the process, it's okay. Call me.